Hey guys, Alegre-Wood here, author of the 3+1 Plan and chairman of YPC Group, where we help you to build a thriving property portfolio so you can live the lifestyle you've always dreamed of, but in such a way that you're not creating a second job or actually working yourself into an early grave. So what I wanted to do today was we've been running the webinars now for a while, and we've compiled hundreds of questions that you guys have been asking. So I want to take those, and what I've done is I've broken them down into a number of really key questions that most of you guys are repeatedly asking. And what I've done is I want to present them to you so you get that level of education. I've always been a massive supporter of free education. And so that's what I want to do for you guys today, is really give you, I guess, what most people out there are concerned about in the market now, about property investment, about strategies, about structures, about all sorts of things, the questions that you guys have been asking. So, it's not now me telling you what you should be thinking, it's you guys actually feeding back. And I love that about the social media, and I love that about webinars. So yeah, sit back, relax, and let's get started. So guys, today what I want to run through, and we get this question all the time, is about what's actually happening with the market turning. When's the market going to turn? When it's going to come back? And the actual question was, right, Brett, give me some good news, about the market turning and what's going to happen with it. So I just want to run you through this. Now, I'm not going to sit here and talk about, oh, look, it'll grow 5% or that, next year. I'm not going to give you those predictions in this. What I want to show you is the fundamentals that actually are at play, so you can look at the market, you can read what's going on and go, actually, yes, things are turning. Because I think it's very easy for guys like myself and the gurus to say, oh, it's going to grow 15% or 10% or 5% or whatever it is. We're totally unaccountable for that. Because you go and make an investment decision based on the 10% and then it doesn't come, well, besides coming back to us and telling us we're idiots, you're not really going to be able to have much recourse. So what I want to do is really give you the foundation and the fundamentals that I use and every other property expert uses. And I can tell you, whether it's 5% next year, 10% next year, nobody actually really knows, because every year I do that blog, the first blog of the year, where I take all the experts that give predictions, and most of them are wrong most of the time. And in fact, some are wrong all of the time. So who do you trust? Well, the only person you can really trust is yourself. And that's why I want to give you today the fundamentals of the market turning and what is causing that and what are the fundamentals behind it. Okay, so first of all, when I mention, and I've been saying a lot about London market has turned, and the last 3 months, 6 months has seen the London market turn, and it has been growing really. It's been bouncing on the bottom since March 2009. That's when I sort of said, right, this is bottom, we're bouncing along. In fact, I was on GMTV and I actually, said that as well. And it has come through. Prices haven't dumped off, they haven't dropped off, they haven't shot off either. And I'm not saying they're going to shoot off, but what I am saying is this, and this is what, sitting down over the last sort of, month or so, I've sat down with the 4th largest fund manager in the world, okay? So, and I've been at a lecture with them and spoken to them, and there's a blog written about that. I've sat down with 4 sales directors of major companies. We're talking about the top 5 builders or developers in the country and what their thoughts are. So this isn't just me saying this. This is multiple people. I've sat down with 2 managing directors. I've sat down with a recruitment entrepreneur. This is one of my mates. He owns, they have about 8 staff or 10 staff, and they do specifically sales recruitment. And he is the busiest he's ever been in 20 years of being in business. So, market turning, I would say so, because what do? You hire salespeople to go out and get you more business because of the anticipation, okay? I've also talked with one mayor. Now, albeit it was a Scottish one, it was nothing against Scotland, I'm 25% Scottish. The point was, I was up there. Now, we don't do property in Scotland, but talking about what they're expecting. And also, they've got the Commonwealth Games up there in 2014 as well. Now, tyre kickers are back. One of the things we're noticing on my sales floor, and we have about 15 guys on the sales floor, and one of the things we're noticing is tyre kickers are back, which we haven't had tyre kickers in the market for 3, 4, 5 years, okay? They're people that are actually sitting there and they're just generally asking questions. They're not ready to move yet. These guys are coming back, okay? So we're starting to get people inquire. I'm not interested right now, but I'm just sort of thinking about it. I'm just putting the feelers out. So that's great news, because that's a big thing. The moment tyre kickers come back, then we know that the masses are starting to, their consciousness is starting to change. So the market is turning, it's turning, definitely. So tyre kickers back. Now, what's causing and what's holding the market down, and what's going to actually, hold the market down, but also what's propping the market up? Let's have a look at that. So first of all, lending restrictions. banks aren't lending. And in other words, that works in two ways. It works in that it's not going to mean that prices are going to go through the roof, but it also means that what's happening is there's a lack of supply because developers aren't able to get the lending. So therefore, it's not allowing prices to drop, okay? So it's working in two ways, because if there was lots of supply dumped on the market, prices would drop. Lack of supply keeps the prices up, lack of demand keeps the prices down. And that's why they're bumping along the bottom, as we've been saying for a while. Okay, so Asian and Middle East investors. This is one of the other things that's propping the market up. There's lots and lots of money in Asia. Asia is an amazing place right now. You know, if you haven't been there recently, go there because you'll see just how much of a boom, if you like, it is. Their governments are actually quashing, you know, the house prices and quashing the ability to speculate, to buy and sell and do things like that, because they're an overheated market right now, which is great news for us because that money that can't be invested there is being invested in the UK, and specifically London and specific university towns. And I mean, I choose 13 university towns, and that's all. So there's a massive lack of supply happening. Nothing has really been built for 3.5 years now, all right? Nothing, okay? And what that has left a massive gap. We're supposed to be building 250,000 houses a year. We're building about 60 to 70,000 houses a year. So massive shortfall. Now, what I've said here, lack of supply, but also lag in supply. That's not happening yet. But the moment the demand bounces back, what's going to happen is this is where, when we've been talking about a lack of supply, this is where all of a sudden it's going to be revealed. Right now, the government should be pushing, you know, new build, pushing and getting lenders to lend and actually getting that happening. Because otherwise, what's going to happen is when the demand comes back, the supply is going to lag behind. 2 to 3 years, in fact. And in those 2 to 3 years is your golden opportunity to make some fantastic money. And you will. Mark my words. Watch what happens when the demand bounces back, when lending returns. The Asians are still going to be coming in. The Middle Easterns are still going to be coming in. And the market is going to do this, okay? It will. There's no doubt about it. It does every single cycle. That's what happens. There's a lag in supply, and that lag in supply is when prices skyrocket. Now, if you're on the wave then, fantastic. If you're off it, well, you missed an opportunity, okay? Doesn't mean you've missed the total opportunity. You still can jump on at any time, but certainly worth considering jumping on sooner than later. Okay, so let's have a look. How will it happen? Because what I want to really get you a sense of is how it's going to happen, okay? And right now, what I'm saying here is London ripples to city centres, okay? So if you're investing now in London, you're already going to see capital gains. We sold some properties on Friday. On Monday, they went up £7,500, okay? Which was about a 2% increase, okay? 2% over a weekend, okay? Now, admittedly, my investors did have some insider knowledge, or I had some insider knowledge, so I knew what was going on there. But the great thing is, this is already starting to happen, okay? So if you're investing now, London is the place to be. If you can't invest in London, you don't have the capital to get in there safely, securely, and provide for it, then what you're going to be looking for is the city centres. Now, don't listen to the garbage that people are going to sell you that city centres are overvalued or are overstocked and have too many properties. That was 5 years ago. It's changed now. The market has changed. You've got to get with the market, and the market is city centres. Now, what happens from the city centres? It ripples out to the suburbs, okay? So, if you can't afford to get into London or the city centres, then get into the suburbs. But, and this is a really important thing, right now you've got two choices in how you approach this. You can either go for London, okay, and city centres, which will be which will be low discount, but early growth, okay? Or you can go for the suburbs, which will be a much higher discount, okay, but you're going to be waiting for growth. So it really depends what you want to do and what you can afford to do safely, securely, because remember, interest rates will be going up. Now, they may not be going up straight away. It may not be this year. It may not be even, probably next year, okay? And certainly what I've been saying is from 0.5 to 2% base rate will go up, and then what will happen is the 2% to 5% will go up and down the other end. So after we've had some capital growth. So you've got to allow for at least a 1.5, okay, to 2% rise in your interest rate. And if you can handle that, you'll be fine. But these are the choices you've got. Now, once this comes and once the growth starts to happen and the momentum kicks in and the demand's back and the lending's back, all of a sudden then it's all aboard, Everyone will be on, okay? Everybody will be on. And when that demand kicks in, the supply kicks in, then it's just a normal flowing market. And then we've got that for quite a few years, 6, 7 years, okay? where you will experience growth, and good growth too, really good growth. But you will have missed that initial wave that I'm talking about, getting you on now, so that next year when it comes, okay, you're on it already and you're already taking advantage of that. And not just in one property, not just in two, but maybe a portfolio of properties if you've got the capital to safely do it. Okay guys, excellent. So guys, I'm sure you found that information really valuable. The first step really now is that you need to get a plan. You need to actually, work out exactly how you're going to put this in place. So what I encourage you to do is come in and sit down with us, talk to us, grab a coffee with us. And what we can do is we can actually start mapping out what your plan is. Guys, I'm looking forward to meeting you real soon at either one of our webinars or perhaps a seminar, or if you come to one of our offices around the world. Have a great day, and remember, live with passion.